Thank you for joining us on Black Investments Matter. We're going to go over 3 considerations you need to take into account when considering opting for venture capitalism as a source of funding. When I thought about tackling this topic, it was more along the lines of why shouldn't I go opt out for or opt into a venture capital situation? What could go wrong? Well, as it turns out, quite a few things. But before we jump into that, let's talk about some ways where we can gain access to capital. Of course, you can secure your own capital by saving your funds, by working, by actually doing something in the business that you're trying to get into, starting off small and going that route. But the biggest drawback of doing the self-funding method is that you are responsible for everything that goes on, and your growth is limited to how much you are actually generating in revenue. That may be a deterrent if you're on a timetable. But if it's something like a dream that you have, something that you yourself want to control always, your life's passion, that may be the best and only option for you without securing a whole bunch of debt. Now, of course, along with that can be some form of crowdfunding, like through a charity or through a GoFundMe page or something that doesn't require a commitment to others to funding you themselves. And we're going to go over a few of those others right now. Another option, of course, is a traditional bank loan. Bank loans come with their own bag of tricks, but you're only responsible for those monthly payments on that loan. And of course, that depends on how much you are approved for and what you're actually going to do with the money and how much of you're going to be able to pay back should your business not be as successful as you think it may be. Once the loan is approved, and that process can be daunting, you may consider opting into some new revenue streams or whatever you want to do. But the bottom line is you're going to have an obligation to pay that money back. And you have to make sure that the terms and the interest rate that you're going after fits within your budget. Now, with venture capitalism, this is the maximum way to raise funds. And there's no monthly payments that you're going to be responsible for. However, some of the downsides of doing this, of course, is the fact that you're giving up control of your business. Usually, you're giving up virtually all of the control. You are a partner, not even a majority partner in your own business. In rare cases, you end up actually losing your business. You can be bought out. It's almost as if you are an employee of your own dream because you are responsible to those stakeholders in that business. And I say that business because it's no longer your business, it's our business. Sometimes that drives people away, but when it comes to access to capital, access to expertise, that's what you're actually paying for. When you give up control of your company, that's the trade-off. Somebody's going to tell you what you need to know to make this business successful because it is in everyone's best interest that this business is successful. But again, if this business is your life passion and you're not so much concerned about the profitability of the business as you are in the fullness and completeness of you owning and operating your own business, doing something that you love, this may not jive well with what the stakeholders will have in that. You want to keep that in consideration. Let me know what you guys think about this option or this way of going or this way of thinking. I'd love to hear your comments in the section below. Make sure you like and subscribe to the channel. And once again, all money ain't good money, so watch how you spend it. Talk to you later.